Once again, Nicholas Gerli of Reventure Consulting has put out a video in which he's dead wrong about the US housing market. But this time, I honestly can't determine if he's extremely dumb or extremely dishonest. So here's what we're gonna do. My primary interest is arming investors and homebuyers with pertinent data and meaningful analysis. So I'm going to front load this video with the important data, follow that with succinct and reasonable analysis, then tear into Nicholas's ridiculous video. And trust me, some agitated rants are coming. And finally, I'm gonna ask you to weigh in on whether you think Nicholas Gerli of Reventure Consulting is an idiot or a liar. Let's get started. There are two reasons why this is the most important graph to consider when weighing the current health of the US housing market. Reason number one, the US housing market is a two-sided market like eBay. Buyers and sellers are both participants in the housing market, and this graph, month supply of inventory, captures their interaction. Month supply is a ratio, with the numerator being the number of homes available to buy in a given month, i.e. supply, and the denominator being the number of houses bought that month, i.e. demand. A month's supply divided by a month's demand tells you how many months of supply remain. This number fluctuates on an annual cycle, but if we add the trend line, we can see it is decidedly down. That means the denominator has been growing faster than the numerator. In other words, demand has been outpacing supply. Reason number two why this is the most important graph to consider. We haven't even gotten to the pandemic. This graph covers 2015 through the end of 2019. This trend of demand outpacing supply predates the pandemic craziness. Now, you'll be shocked when you see what happens once the pandemic hits, and I'll be sharing that data shortly. But first, we have to understand why this pre-pandemic trend existed to begin with. TLDR, the demographics have been shoving it down our throats on both ends, if you know what I mean. Let me explain. The median age of a first-time homebuyer in America is 33. This data set, prepared by the US Census Bureau in 2020, breaks down US population by age. As you can see, from age 46 to age 29, population grows each year. Now, as I mentioned, this data set is 2 years old, so the upward trend in population growth is today from age 48 to age 31. What this means is, for each of the last 15 years, more first-time homebuyers entered the market than the year prior, and this demographic reality will continue until 2024. This bears out in the sales numbers. This graph shows existing home sales from 2015 through the end of 2019, so again, completely pre-pandemic. Sales peak in the summer and bottom out in the winter, but if we draw the trend line, we can see it's going up. In fact, each month sees about 4,400 more homes sold than the same month the previous year. So demand has been steadily climbing since 2015. What's been happening on the supply side of the housing market? In this graph, we have existing home inventory, again, from 2015 through the end of 2019. We see the cyclicality, and adding the trend line confirms that, indeed, inventory has been on a pretty sharp decline. On average, in the 5 years preceding the pandemic, the US housing market had about 135,000 fewer listings than the same time the previous year. There are two reasons the US housing inventory has been dropping so precipitously. One, as a nation, we basically stopped building new homes after the Great Recession. This graph shows new US homes built per decade. Whereas over 27 million new homes were built in the decade preceding the Great Recession, less than 6 million homes were built in the decade following it. You may as well consider 2010 to 2019 a lost decade for US home construction, and we have a lot of catching up to do. But also, reason number two, homeowners are getting older and staying in their homes longer. A 2019 Redfin study found that from 2010 to 2019, the median home tenure, that is how much time a homeowner spends in a home before selling it, grew from 8 years to 13. The study dug into 55 metro areas and found, as you would expect, that as median home tenure grew, inventory dropped and pricing climbed. According to the National Association of Realtors, from 2013 to 2021, the percentage of homeowners who spend 2 decades or more in their home before selling grew from 16% to 20%. And according to the US Census Bureau, from 2009 to 2019, the percentage of homeowners over the age of 55 grew from 43.6% to 55.5%. Long story short, the boomers are us over again. Remember our 2020 graph showing population by age? Here's what it looks like in the 50 to 80-year-olds range. Population jumps at age 73, which is today age 75, and this corresponds to people born in 1946, the very first baby boomers. Population by age grows every year for the following 15 years until you get to today's 60-year-olds. Look, I love my parents, but they're 76 and 74 years old and still live in the 6-bedroom home I grew up in. Every year for the next 15 years, we'll see an increase of healthy boomers who are staying in their home instead of cycling it back into the housing inventory. So we have these dual demographic trends that have driven up demand, mostly from millennials, while at the same time diminishing supply, mostly due to boomers. These trends predate the pandemic, and then the pandemic supercharged them. U.S. home sales have accelerated, with both peak sales numbers and trough sales numbers climbing faster than the 2015 to 2019 trend line. Inventory has been further diminished, barely climbing over the 2015 to 2019 trend line, even at the peak of the 2021 housing cycle. And revisiting the month supply graph, we see the spike in May 2020 when buyers momentarily stopped buying, but then month supply immediately falls again, and in December 2021 reaches 1.8 months of inventory, its lowest recording ever. So obviously, while I wasn't exactly surprised, I was definitely taken aback to hear Nicholas Gerli of Reventure Consulting declare,
"New data is showing that the number of home sales in America is collapsing. It is plummeting. Put simply, home buyers are on strike from this housing market. The prices are too high, the inventory is too low, inflation and interest rates going up just makes it even worse, and buyers are on strike."
Home buyers are on strike? Are you kidding me? See, this is where I don't understand if Nicholas Gerli is just an idiot or intentionally trying to deceive his audience. We discussed what the month supply ratio means, that if month supply is decreasing, it means demand is outpacing supply. Is Nicholas Gerli, despite billing himself as a real estate consultant, so dense that he doesn't understand this simple metric? Or is he aware of this data and just withholding it from you because he knows he'll get more clicks by saying,
We're comparing December 2021 to December 2020. We're comparing the same month and the same season, and it's saying a big reduction in home buyer interest in demand across America.
The exciting data that Nick is talking about here is a 7% decline in sales from December 2020 to December 2021. However, over the same period of time, according to the same data set, there was a 14% decline in inventory. So you tell me, if sales decline only half as much as inventory declines, does that suggest a big reduction in homebuyer interest and demand? Now, as though Nick is aware of how stupid an assertion he's making, he goes on to warn his audience,
"And do not be deceived, everyone. People in these markets with big declines in home sales, they're going to try to tell you that this is only a result of low inventory, and that when inventory comes back, they're going to say all the home buyers are going to come back. But..."
Okay, so I intentionally cut Nick off right before he said but, because we're going to get back to that but in a second, but I need to pause the clip here to make one quick point. Nick, the home buyers don't need to come back. They never left. I again point you to the month supply graph and remind you, lest you're unaware, that the U.S. housing market is a two-sided market. What this graph tells us is that for the last 7 years, whatever has been brought to market has been bought up and then some. The home buyers never left. Okay, now check out Nicholas's but that follows this ridiculous claim.
But you guys are smarter than that, right? I gave you the 4 reasons why home sales are declining. Yes, lack of inventory is one of them, but there's 3 other reasons: sky-high prices, inflation, and escalating interest in mortgage rates that are really pushing people out of the market.
You guys are smarter than that, right? You guys are smarter than listening to anybody who disagrees with me, right? I mean, I gave you 4 reasons. I said 4 big vocab words, and now I'm gonna say them again. It'd be embarrassing if it weren't so fun to ridicule. Okay, Nick, your 4 reasons. Number 1, constrained inventory. Ding, 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 correct answer. Number 2, high prices. What are you talking about? Yes, prices are higher than ever, and that sucks. But if we actually graph pricing against month supply, you'll see the relationship is inverse since 2015, but especially since the start of the pandemic. Simply put, the numbers do not suggest we've reached peak pricing. We can deduce that more affluent people are buying the houses, but even at these record prices, everything is getting bought. Number 3, inflation. Bro, do you even know what inflation is? And how do you separate inflation from high prices? You know, a third of the CPI, which we use to track inflation, is housing costs. And how do you separate price inflation from asset inflation? A lot of people who bought homes this last year did so with their windfall profits from the inflated stock market. You know, Nick, usually I think you know more than you let on, but in this case, I really think you're just dropping a buzzword and hoping nobody asks you what the hell you mean. And number 4, rising mortgage rates. And here there's some truth. Yes, of course. Obviously, rising interest rates will put downward pressure on pricing, which is why most analysts think price growth will be in the single digits this year, as opposed to the 2 years of double-digit growth we've just seen. Rising mortgage rates are a headwind, but a market crash they do not make. Okay, so now it's time for my informal poll. Informal poll. Okay, so now it's time for my informal poll, and if you've watched this far, you're certainly qualified to weigh in. Question: is Nicholas Gerli of Reventure Consulting an idiot or a liar? And what I mean is, did he completely misinterpret the December 2021 sales numbers because he doesn't understand how housing numbers work? Or because the reality of the situation wouldn't allow him to make a clickbait bedwetter video with 100,000 views? Just quickly comment below, idiot or liar. Now let me tell you what I think is going to happen in the year ahead. A market crash isn't impossible. It's never impossible, but it would require a very significant economic event outside of the housing market. I worry we're seeing a bubble in the stock market. I know we're seeing a bubble in the crypto space, but fortunately, as large as crypto is, it's still just a fraction of the size of the mortgage-backed securities market that collapsed and took the world economy with it in 2007. Still, we're in a very uncertain time economically, so you can never say never. The rapid price growth we saw in 2020 and 2021 will abate this year, and nationally, will return to low single-digit price appreciation. Of course, all real estate is local, so every market is going to have its own story. But as the economy picks up and mortgage rates climb and life sorta slowly gets back to normal, the housing market will return to its typical levels of appreciation. Looking past this year, the demographics suggest that demand from first-time homebuyers will continue to climb through 2024. However, even though the number of first-time homebuyers entering the market should start to decline in 2025, we'll still have the supply problem of older homeowners staying put longer, and that problem won't start to abate until roughly 2035. The conclusion, my friends, is that America needs to build significantly more homes, and it will take years, like a decade, of ramped-up home building to combat these demographic realities. So if you've put your real estate plans on hold because you're convinced that a massive housing crash is looming, I hate to say it, but you're probably wrong. Now's a fine time to get into the market, though you still need to buy smart. If you want help on that front, subscribe to my channel instead of sitting on the sidelines with Nicholas Gerli and Reventure Consulting. My name's Jon Schwartz, I'm a real estate investor and realtor, and I help homebuyers in markets all over the country pursue better strategies. I'm sincere in my research and analysis because over half of my personal net worth is invested in real estate. If you like this video, let me know by punching that thumbs up and subscribe for more videos like this one out every Tuesday. See you next week.